one of the core concepts that's spoken about at a lot of family law conferences is the concept of normalizing financial statements. In your experience, Kevin, what do family lawyers misunderstand about normalizing financial statements?
I think the notion that, well, strike that, counselor. My experience is generally, if they don't understand the normalization process, it's probably because the expert that they're working with isn't able to explain it effectively. Because it really, I think it's a pretty straightforward concept. You're looking at a business and you're making some assumptions about what it's going to do in the future. Valuation's forward-looking. So if you're trying to come up with what you expect that to look like in the future, it certainly makes sense to pull out anything that is non-operating. Maybe it's personal expenses that are being run through the business inappropriately, or maybe it's not some non-recurring expense or revenue. So what you're really trying to do is come up with an expected future economic benefit that is reasonable to assume going forward. The non-recurring things, for instance, you're not going to see them every year, so that's why you need to pull them out. The personal expenses aren't necessary for the business to operate. Those need to be pulled out. And so the concept of normalization, for the most part, most of the attorneys that I work with understand that pretty well, even the new attorneys.
Okay. So can you give us a fun and interesting example from your career of a normalizing adjustment? And that could be a non-operating asset that may exist in Europe.
Wow, where do I start?
Just pick one that's fun.
Well, I can tell you that I have found expenses related to diamond earrings for a paramour on more than one occasion. It's not unusual to find gambling at casinos. Boy, and I guess I'm making all of the husbands look bad out there, because it seems to me that most of the normalizing adjustments that I've run into have been a result of what the husband's done. Those are probably the tamest ones. Certainly, I think maybe for everybody concerned when they're going through a divorce, the stress of it can cause, what do they say? In criminal actions, it's bad people being as good as they can, and in divorce court, it's good people being as bad as they can. I have found that to be the case.
All right, so let's get in the weeds a little bit for the general population here.
Okay.
Talk us through how you might find those diamond earrings.
Gosh, well, believe it or not, people that are running those things through the business are remarkably transparent, I suppose. That is where a forensic analysis would be important. And I will just tell you, I mentioned earlier that I didn't like it because it's too in the weeds. It's detail oriented. Somebody else can do it. And what they would have to do is get bank statements or credit card statements and look at the specific transactions that have occurred. And, you know, they may, sticking with the earrings. I mean, you're looking at a company that is a manufacturing company and see that they had a $10,000 purchase at Zales or whatever your Kevin Jewelers, you know, which would make you think, what would that be for? The other thing is that on occasion, when one of the spouses comes to me and says, I think that my spouse has been wasting assets, or they're not recording everything. And I would say, okay, tell me what it is specifically that leads you to believe that. One of two things is going to happen. Either they're going to give me a specific instance of it, or they may say, well, I don't have a specific instance, I just feel like that's the case. And then I will say, in either case, great, I can analyze this more, but if I'm doing a forensic analysis and I'm looking at every transaction for 5 years in the bank statements or the credit card statements, as you might imagine, that gets very pricey. So the expert, I think, should have the ability to look at it and say, okay, in order for these things to impact the value $100,000, whatever that number happens to be, here's how much waste or personal expenses or whatever, here's how much would have to be going through the books just to create that $100,000 difference. And what happens many times is they would say, oh, well, it's not that much, you know, it might be $1,000 a year. Okay, well, that's not going to move the dial much. So I think it's important to have that communication with your client, with my client, to kind of be able to walk through and explain what the potential impact is of those things.